at market close. I think it's kind of funny that this has happened. Yeah, this happened here, and this happened Friday as well. So literally Thursday and Friday, we had some fun little movement right at market close. But we consolidated through the night. And then at market open, we pushed to the open, taking out more buy side, which we were bullish basically through the entire day. And we closed almost out of the gap. We are almost out of the drop that we created that probably made a lot of people freak out that the market was going bearish again. I personally believe we're in too much of a bullish market right now to really expect that, but we had to balance price, and we left a lot of imbalances below, which is why the market came down and rebalanced it all. The reason we came back down in this point right here is because if you look over to this left, you will see this dip. Look to the right, you'll see we rejected that. That was an immediate rebalance, allowing us to come back down, take out more sell side, rebalancing price to push back up to the upside. You see right here where we rejected, came back down. If you look to the left, you'll see this little dip right here. So that was an automatic rebalance again, allowing us to come back down to take more sell side. Coming back up, and look where we stopped at the end of the day. If you look right here, you'll see this dip. We stopped just at it. So price is now rebalanced. Now, in my personal opinion, I think at Sunday at open, of course, we will push back to all-time highs, but I see a bearish Monday because we just did a price rebalance. Now, you never know truthfully what the market can do. You can have a whole bias and a whole plan, and the market can totally show its ass and do whatever it wants to do. So, especially when we have Trump, who loves his Twitter and everything. Yes, I looked at your chat. I'm just kind of doing my own thing real quick since this is the start of everything. I just had stuff I wanted to go over first. But so we did a rebalance now. So I could see us taking this buy side that's sitting up at the top and then allowing us to push back to the downside and taking out all this liquidity that's sitting down into here. I don't think personally we'll go past this though. This area. So that's just my 2 cents. This is basically the movement that we had for the week. I wanted to go through that with you guys. That way you all could have a visual on everything. Now let me clear this. I'm just going to clear it all. Cool. Okay. Let me pull up your message again, Crimson. So I know when I do these sessions, there's really not too much of a plan. I'm going off of you guys and what y'all want to know, what y'all have questions on, what y'all want to learn. I'm answering those things. Now I do kind of I know last time I did my live session, we went over fair value gaps. I know I have a few of you newer people in the channel watching videos, practicing fair value gaps, sending me screenshots of them just so I can see that you've grasped the knowledge. Y'all, the people who have been doing that, y'all are getting it spot on. So I'm proud of you guys on that. That's the first thing you learn in ICT is fair value gaps and training your eye to spot them and use them. As you see in what I drew out, they get used quite often. And one thing I'll tell you guys is always, if you want to, you can start on a 5-minute time frame. You can start on a 15-minute time frame. Those are the two that I prefer. Draw out fair value gaps that are created in the market and wait for the market to retrace back to them. You shouldn't be trading unless the market retraces back to them. Like your standard, your rules, you should wait until the market retraces back to that fair value gap. And if it doesn't, then you're not going to take the trade. You may miss it to sell side. You may miss taking to buy side. You may miss a whole move, but you got to stick to your standards. Otherwise, you're gambling. And we don't want to do that. We want to come in with strategy. We want to come in with rules. We want to make sure that we're following them, because I've seen people blow accounts and lose money very quickly just because they have FOMO. You're not missing out on anything. The market's always going to go up. It's always going to go down. You may miss one opportunity, but I guarantee there'll be a million more. But what I suggest is start with the 15, start with the 5. You can draw fair value gaps on there, wait for the market to retrace back into it. And then you're able to find your entrance on the 1 minute. That's what I suggest people do. Typically, you'll draw a fair value gap out on the 15. If it retraces back into it, I will drop to the 1 minute, look for another fair value gap that could be created, and then use that to take either to the upside or to the downside. That's typically how I like to roll with things. And I mean, let's see if I can find a good example for you guys. I mean, there's one that's just screaming my name right now, and it's this one. So let me drop down to the 1 minute. And honestly, I'm not crazy about it though, personally, due to the fact that, I mean, it's $120, what, $160 move. So I mean, that works. So what you see here, now a lot of people would be like, okay, immediately want to take action in this area. We still need to see a continuous repetition of bearish movement. So, I mean, you could enter here and target this low right down here. That's over $100 move right there. So there's nothing wrong with that. So you see it trace back up into this fair value gap. Now, a lot of people sometimes will enter on a fair value gap that's here, enter on a fair value gap that's here. I don't recommend that to you guys. The reason for that is oh crap. I was showing just a little bit ago on the 15-minute how price did a rebalance before pushing to the upside. So like it'd be like, so like this area, for example, this spot right here, look how price ended just right at it. That little dip before the push up, then the drop, it did a rebalance by going into this area. And of course, I'll teach you guys that more as time goes by, probably especially on our individual sessions. That way I can kind of make sure y'all grasp it individually, because it took me a little while to be able to understand it. But it'll make sense. So what I'm wanting to see though, me personally, I'd want to see it come up into here, because you see how it came down, we pushed back up before the dip. That would be my entrance personally. I wouldn't want to see too much past that. Um, so I would be drawing out this order block that's right here. And that's personally what I'd want to see. Now, as you guys know, you never set your stop loss directly outside that fair value gap, because the market can push up to it. So always just a tiny bit out. Um, but that's kind of like how you can do it, using fair value gaps for entrances. I'll find another one, just because like I told y'all, that's not one I'm crazy about. Um, here you go. Anyone, you can type it in the chat if you want to. Look where the market pushed to before it continued to drop further, right? Look at this low. Did a rebalance before allowing it to push lower. So the market came back up into this fair value gap, tapped into this low, tapped into the fair value gap, did a rebalance in price, and then it pushed to the downside. That's the kind of stuff I want you guys to look for. So like for me, if I'm going to take an entrance, of course I want it to retrace back into this fair value gap, but there's a higher probability that it's going to push up into around this region area right here. before pushing to the downside. So getting in on this fair value gap here, getting in on this fair value gap here is not the best idea. We don't want to just hop in immediately when we see a fair value gap. We want to watch how price responds. So it came down here, pushing back up. Then we had the further dip. So we're still in a bearish trend because we're making lower lows each time. But I want to see the market push back up near this area for an entrance. And I know, Mike, this is something I haven't really talked with you yet. So hopefully you like this and you can use it, because I know you've been kind of like trying to apply more stuff lately. So not to mention, of course you do. So this would be perfect for you. We retrace back into the fair value gap on the 15-minute time frame. You could use this fair value gap because it came right up into here. We did an automatic rebalance, and then we were able to push down to the downside. And this is the kind of stuff I love about ICT, because so many people who hate on it are people who just don't understand it. And I mean, you can't sit here and tell me that it's not like perfect. I think it's beautiful. And then like most of the stuff a lot of people trade with is ICT. It's just you represented differently. All right. What do you want me to explain, Riz, like specifically about it?
Hello, Chris, can you hear me?
Yeah, I can hear you, dude.
Okay. Well, number one, I noticed you took an entry on 1 minute, and it was right after opening market.
Mm.
So, what do you see, and what made you to take a decision? Okay, you want to go short or you want to go long? And I see you have used fib, and I know you have mentioned why you used fib. Just I want to understand what was the context behind it,
Yeah.
making a bias, whether going up or down. So that is
Hmm.
the question. Yeah.
Yeah, may I add
Let me.
something?
Whoa.
Yeah, sorry. I'm happy to be here. Chris, listen, in this particular trade the Reese is talking about, right? I'm really curious about shifting bias because that was crazy. It was like neat and clean. So first you go long and then you go short. That's the most
Those
surprising thing about the trade.
are you talking about the photo he posted?
Yeah, exactly what you're talking about.
Yeah, dude, those are so like don't expect to like immediately do these types of things off the bat. These are split-second decisions. You have to take it right in that moment, no hesitation. Especially right at the open, because the market's just hunting for liquidity right at the open. And I'm going to explain that right now. But I did want to get to your question first that you asked right before that. Um, but Riz, those two photos are the exact same trade. I just posted a more in-depth photo in that second photo you posted. That way, because I think it was Crimson who asked me to explain it. Um, so yeah, um, so first we need to see the fair value gap get respected. After this, we're going to find another fair value gap as an entry model. Yes. So I mean, because like if you think about it, if you take this, it'd be different on M and Q. But for me, it'd be expensive of a trade. This is a 483 to 540. It's a $60 fair value gap. That's over $1,000 stop loss on one contract. And so I want to see the market retrace back into this on the 15-minute time frame and respect it. And then I drop down to the 1 minute, and that's when I find my entrance. And you can do that with the 5 minute. Personally, guys, you're gonna want to use the 1, the 5, and the 15. That's what I was taught in ICT. That's what I preach to everyone. If you guys enjoy another time frame that works for you, if it's not broke, don't fix it. But that's what I was taught. So I just teach what I was taught. Now on this trade, what day was that? So I'll just open it right up to it. Well, I mean, it was a 9:30 open, so it shouldn't be too difficult to find. Can anyone check real quick while I try to find it and see what day I posted that? Or I'll do it real quick. Eight seven. So what was that? Wednesday? No, Thursday. Okay. There it is. And this would have been, I wish I played back to the upside after this because I was right at 945 that we reversed. You're always, so one thing that my favorite times, two favorite times to trade, 945 or 10 o'clock. Those are called the reversal times for ICT. Typically, a lot of people you see trade who can top tick and bottom tick, they do it at 945 or 10 o'clock. Those people who post those crazy photos where they literally have no stop loss and they catch the top of the market or the bottom of the market, they do it at 9:45 or 10 a.m. every day. If the market's going to reverse, it's going to happen at one of those times. As you can see here, it did it twice. It happened at 9:45, it reversed to the upside, and then at 10 o'clock, it reversed to the downside, and we took sell side the entire rest of the day. If the market's going to do that, expect it to happen at those two times, at one of the two. If not, then that's your sign that we're going to have a continuation. And so let's say if it didn't reverse here, that's your sign that we're going to have a continuation to the upside through the day. If it didn't reverse here, that's your sign that's going to have a continuation to the downside that day. Those are perfect little things just to tell you guys because they're little hacks. But a lot of times you see on TikTok, Instagram, people bottom ticking or top ticking. If you look at the time that they do it, it's 9:45 or 10 a.m. Now, it may be a minute or two before or a minute or two after, but it happens right then. It's pretty crazy, and you can back test that, fact check it all you want. I have done it myself, and it proves true every time. Just so y'all guys know. So you taking a trade, ride it open. You can if you want to. I don't always advise it unless you know exactly what's going to go for it, because we get usually those explosive candles that open that will blow an account in seconds. So let me show you guys this trade. So what I did before the open is I dropped down to regular trading hours. Now I got to find it again. Here we go. So typically at the open, the market's going to do one of two things. Market is going, and it may not be directly at open. I mean, that day I posted in the channel that I wanted to see it at least touch 50% of the opening range gap, and we did, but we got a full closure. Sometimes it'll only take 50%, and then it'll bounce and take to the upside or downside. But I wanted to see that this get closed. If the market doesn't go to close it, then expect it to go the other direction. So that's always a helpful thing to have in your toolbox when you're in trades. So right at market open, please guys, draw this on your charts, because this will literally help you know where the market wants to go, outside of developing your bias, which I'll go through in a second. So we opened at 23,601, which is up here. Closed right here. Now, let me show you this. Drop back to electronic trading hours. So you'll see here, pre-market, we took buy side, came down, took sell side, came back up, took a little tiny bit of buy side, came down, took some sell side. So that means the next thing the market's going to want to do is come up and take buy side. We had created this high at pre-market. I wanted to see that at least get taken. So I had this drawn out. So that was one of my targets. We hadn't taken this sell side yet. This was my other target that I wanted to see get taken. So there you got buy side and sell side right there, two targets that I wanted to see get swept. And then there was another target up here, but I didn't go for that afterwards. I was like, okay, I'm gonna call it a day here. I really don't like how big this is. So at open, we came down right at market open, and we took a little bit of sell side. So the market came up, took a tiny bit of buy side, right? Immediately following that, market's supposed to come take sell side. So it failed to take sell side right here. It failed to take this down here. On top of that, it's not perfect, but the market rejected this opening line right here, because this is where we opened at, this line. Came and got right back above it. Not only that, but I didn't have this drawn up. I saw it visually. We had an order block right here, bullish one. So, and the market tapped off 50% of it. So you may not be able to see it because of what I wrote. So let me do it this way. Market tapped 50% of it, and that's a beautiful thing to see, and then wicked up hard. So as soon as it did that, as soon as I saw it tap this at the 50%, I bought longed. And like I said, you have to do it split second. That's why, like, you go for it if you're comfortable with it. Otherwise, wait for clear direction. This is just something I've been able to do through time and experience. So I immediately longed for a quick scalp to buy the side. After that, I wanted to. We were getting close to 945. It was 943 or 942 right here. I wanted to see if we were going to have a continuation. So what did I do? I drew up this wick right here. We stayed under 50%. So we pushed up past it, of course, but we closed under 50%. And then we opened here, pushed up a little bit, went right back down, which was my sign immediately to get in. I set my stop loss right here, and then I targeted this sell side down here. So we came down and took that immediately. And I wish I had came back, because I wish I went and did this afterwards, but it's whatever. I can't complain on that trade. After that, though, it would have been beautiful to catch the top, because we did reverse at 10 a.m. Literally right here. It was like spot on. The highest point of the day was 10 a.m. And we came and we closed through the gap that was created, the opening range gap that was created from regular trading hours. Market came down, swept it. Would have been a beautiful trade to take. I mean, like, that's 669 down to 405. So it's a $260 trade. $100 is $2,000, $4,000, $5,000 on one contract, give or take. So that would have been solid. Where would you join shorts on the way down, since you have a short bias already? At the 10 o'clock reversal. If you could have caught that, that would have been a perfect entrance right there, 10 o'clock. And so this is one of those situations where you have to, that come with experience as well. Those people who are top ticking and bottom ticking, sometimes you may enter right at 10 o'clock. Like, they do it right at 10. Like, if we're bullish, they're going to short right at 10 a.m. And then their stop loss is going to go above a previous wick. And then sometimes they get stomped out, and then they wait for a second entrance. But their plan is to do the opposite right at 9:45 or right at 10 o'clock, regardless. But their thing is their stop loss is so minimal. Their risk, I've seen people do 3 to 5 contracts, and their stop loss is $300 to $400, sometimes less than that. It's just one of those things that come with time. Now, if you missed it, there were a lot of opportunities. This was a Thursday, so I mean, wasn't the most beautiful day to take a trade, as you see. I guarantee a lot of people blew their accounts to that day. A whole lot of chop, but we eventually got to where we wanted to go, Knew and missed the good stuff. Yeah, no, and Crimson, like, reach out to me, dude. And like, I tell all you guys, I don't know why no one ever reaches out to me. I offer one-on-ones. I'm not charging for it. I tell everyone here I'll do a one-on-one session to help you guys out if you want that, but I'm not going to come knocking down your door. If you want to learn it, DM me and we'll plan a time. I have no problem with that. Like, I'm here to help people. Like that's why I do this. Now, you have multiple opportunities. Now, remember, guys, when we're in a bearish market, we want to see some sell side get swept first. When that sell side gets swept, we want to have a fair value gap that gets created from that sell side being taken as it's coming down. From there, we want to draw up that fair value gap that was created as it came down to take sell side. We want to see the market retrace back up into that fair value gap, which is then when we can take our entrance when it comes into that fair value gap. Stop loss goes above the top, and then we target the next sell side down. So it's going to be the opportunity you had on this day is not the best. It did not provide too many opportunities to enter, which is the bummer part. So yeah, and like the other thing is you could have entered on order blocks. Not a lot of people know what an order block is. Well, hopefully you guys do. Because you got an order block that's right here. That's created on the way down. You have another order block right here. Could have called it order block Thursday. That was a dumb joke. Anyways, let's see what else we got. Because it did not respect this fair value gap. There was no fair value gap created here coming down. There was a fair value gap created here coming down, but it closed through it. Block. You guys, you're not wasting my time, and you're not bothering me. If you have questions, like, feel free to please message me over know the answer. Like, I'd rather you know the answer and me be able to answer it so you know what you're doing in a trade and you don't lose money that you've worked so hard for, and you don't lose the prop firm account that you've worked so hard for. Because I know what goes into that. They become our children because we put so much effort into them. Now the market did present an opportunity right here on a bearish fair value gap. So you would have had an opportunity for an entrance right there. That's like the first one. All the others are bearish order blocks. The market did not want to hand out fair value gaps that day. You have another opportunity for with a fair value gap right here. And then you got one right here as well. It's like it decided to finally do it towards the end of the day. Prevented everyone from catching the main move and let everyone catch the crumbs. Got another one there. And then the market did its little end of day reversal right there. So what I was telling you guys, though, we want to see the market take some form of sell side, come up into an order block or a breaker block, and then use that to push further to the downside. Now, me personally, I like breaker blocks. I like my order blocks. Sorry, I like my order blocks at the top or the bottom. Those are my preferred ones to take. I don't like to take all the ones that are chilling in the middle when there's a whole lot of consolidation. That's too much for me. But you had sell side get swept here. Market came back up into this order block, respected it, pushed further to the downside where we took this sell side here Remember, like I said, we want to see in a bearish market, sell side get taken, then a fair value gap or an order block that is created, then the market come back up into that fair value gap or that order block that was created, respect it, and then use it to push to the downside. So it came back up into this order block, respected it, pushed down. We took more sell side. Which was this right here. Then we came back up into this order block. We respected it, pushing further down, taking more sell side. We came back up, pushed further down, took more sell side, went back up into this fair value gap, respected it, came back down more. We took more sell side all through here by going lower, came back up, and there would be a order block right here that you could use. Like I said, now you can use these. Is it my preferred way? No, but they do work. Oh snap, they should be orange. Cool. So it came back up into this order block, respected it at literally almost at the midpoint, like it did up here. Pushed down, took more sell side. Finally, we're starting to create fair value gaps. So the market took sell side, came back up, took more sell side. And then we came back up more to the upside, respected this fair value gap that was created, pushing more further down to the downside. Came back up into this fair value gap after taking more sell side, respected this fair value gap, used it to push further down. After we took more sell side, we came back up. Give me 1 second. But yeah, so you see there's multiple entrants that could have been taken. In the beginning, there really was no fair value gaps that could have been used, unfortunately. So you'd have had to start looking for other forms and other methods to enter on, which is why I love order blocks. Because order blocks, I call, how I was taught, they're called roadblocks. Order blocks will make, when you run into them, it will make the market harder to, it's like a roadblock. It will, a lot of time, reject it, but if it pushes through it, you can expect it to continue to the upside or the downside as long as it pushes through it. Now, a lot of the time, you can use order blocks a lot for entrances in the market. If you see an order block, say the market's bullish, it's going up, you see an order block in the middle from previous data, use that as a partial, a spot where you take a partial, because the market could initially reject there, pushed back down, only for it to then later on come back up and push through it. So use that as a partial or a take profit if typically sometimes if you see them halfway. Now I'd suggest you do it as a partial. And then because you don't want to exit your position completely only for it to not reject it and then close through it. So you can use them as a partial if you see them like halfway up. And like, for example, can y'all see ES that I just put on the screen?
No, it's still showing NQ.
Okay, cool. Thank you. So I'm just going to open up ES then. Or I can do this. So the market came down, and this is when we had our intraday push, right? So you have a bearish order block right here. You have a bearish order block right here. And see, you can see the market came up, rejected it, pushed back down into this one, only for it to push to the upside. So that's why I use them as partials. You got one here, and then you could take profit right here. unless you're ballsy and want to push higher and just trail your stop loss. So you can use this as partials. I put it at the bottom. Put it at the bottom, put it at the bottom. This one didn't have any problem. It literally closed it perfectly and then used it to continue pushing up. But that's just a suggestion, you know. I hate order blocks being in the middle. I hate them because they will cause problems and make the market sometimes a lot of time reject it. Now, as we were going down, you had multiple areas you could have targeted. You could have targeted these lows that are right here. You had more down here. I mean, you had another
you're
one right
still
here.
on you're still on ES.
Thank you, Mike. What would I do without you, bro?
I was looking at this mouse cursor that wasn't here.
So these are targets that you guys would have on the way down. Some of you know this. I'm just more so showing it for the people that have joined recently because they aren't targeting things. Hey, Blonde, it was good to have you here, man. I hope you're doing good, bro, and you stay strong, okay? I can't wait to see you back in trading, but you gotta do what you gotta do. But I love you, man. You take care of yourself, okay? Okay. But those are like targets you could take on the way down. I mean, it continues all the way. You'll see, like, whenever the market takes a low, we see an initial reaction back up to the upside. And then we have that continuation down because it just collected liquidity. Liquidity rests below lows and above highs. So when we collect that liquidity, we have a opposite reaction to the other direction. So then that's why you wait for it to take a low. We see how the market responds going the opposite direction. And that's why we use a fair value gap or an order block, because if it's going to push higher, then it's going to go through it. If it's going to push lower, continue to push lower, then it's going to respect it and go further down to the downside. And so you'll see that this is the furthest we went that day. We swept this low, which is when we had a rebalance at that point. So we were able to push back up to the upside. And it's actually kind of funny because if you look at this high right here, that's kind of where we rejected before we pushed back up. So I get it considered the market was rebalanced at that point. So yeah, those are just targets you target on the way down. What I tell a lot of people to do, let's say, so let's draw this low right here, right? This one. Market just came down, swept this low. Well, so now we want to see it trace back up into a fair value gap. Unfortunately, remember, it was not producing fair value gaps, but you did have this order block that's right here. So the market swept that low. Now what we want to see, like I said, order block or fair value gap get respected. It did. You take your entrance here, stop loss up here, and then you could target this low here, or you could target this one, or this one, or this one, and so forth down. Those can be your partials. It's whatever you want. Main thing I share that is for two people that just joined, which is Rocks and B. Just wanted to go through that real quick with you guys. Because I know I have y'all studying fair value gaps. I just want to see, I wanted to explain that so y'all see what to do from there. So let me go through what Crimson had messaged. Can I elaborate on order blocks? Yeah, 1 minute ones are okay. 5 minute ones are perfectly fine as well. And 15-minute ones are good too. Me personally, I primarily use the 5 or 15 for just fair value gaps. Not really order blocks. My bread and butter is on the 1 minute with order blocks. But like I said, if it works for you, then you do what works for you. I'm just sharing what works for me. Only order blocks that really matter, followed by displacement. Not all the time. And remember, you don't want too big of an order block. You don't want too big of a fair value gap. I've seen minuscule fair value gaps get used, and I'm talking like a fair value gap the size of $2 or $3. I just wanted to touch that before going the other direction. And Mike's seen it too. Volume imbalances. Volume imbalances are freaking goats. The market will push back for a volume imbalance, and it can be $60, $70 away. Like let's say you had a volume imbalance down here, and the market pushed back up to here. The market could then decide it just wants to come back down, tap into that volume imbalance before pushing to the upside. Completely knock you out of your position, completely screw you over. But volume imbalances act very strong in the market as magnets, is what I like to call them, because they literally, the market will pull back to it. You don't know when, but it will. And it's annoying, but they're really good to use sometimes as partials, or sometimes good to use as targets. So let's see if I can find one. Dang, that was close to that one, but that wasn't it. Anyways, it doesn't matter. I don't want to put too much on y'all's plate right now with that. That just adds to the confusion. Riz, so that's what I see for Monday for liquidity sweep at top, because we're nearly 81 points away from all-time high. Yeah, no, like what I was saying, so if Riz, pull up your photo, or maybe I can do it. Or I'll just show you with my chart. So if we drop down to the 15-minute, you may have missed it.
Chris, you can show my picture or post. I can't share my screen.
No, you're good. I'm just gonna show it on my screen. What I was showing everyone at the beginning of the session, I don't think you were here for it. You see this dip that's right here? Riz? What happened? Can y'all still hear me?
Yeah, we can hear you.
No, we
Oh,
we
Riz,
can hear you, but we can't see your screen.
No,
Okay, I just
I
got
can
it
see.
here.
I was
Yeah,
gonna say I can see the screen.
so Riz, do you see this little dip that we have right here? How the market came
yes,
down
yes.
and it pushed back up only for it to drop afterwards. So the market closed right at the end of the day, right at it. So what I was telling them at the beginning of the session, the market could be rebalanced right now. It could have just done a rebalance in price. And in my personal opinion, market could open and reject here, or I could see us take to the upside, take this buy side liquidity, and then us push down to take out this liquidity here and potentially this liquidity that's right here. That's what I'd like to see. I don't want it to go lower than this. That would not be good.
What I have noticed lately, as you mentioned, there is a liquidity on the downside. If market have intention to move up, they will sweep, downside first, and they will continue moving up.
Yeah,
So we will know
it's
on
the
Sunday.
funniest thing.
Yeah, we will know on Sunday.
So guys, in order for the market to go lower, it has to go higher. In order for the market to go higher, it has to go lower. We have to take some form of sell side or form of buy side for it to go the opposite direction. So like what I was telling you guys, it could be rebalanced at this point. I could see this get swept. Now we took all the liquidity at all-time highs, and then it'll allow us to push to the downside. A lot of time at market open, you'll see the market, it will take some form of buy side or sell side and then go the opposite direction. Does it constantly. And I think I continue to post photos and tag Mike in them every time it happens, because it's just a continuation of a conversation that we had a few months ago on how the market does that. It will take a buy side and then go the other direction. And it's to trap retail traders. the retail traders will think, okay, we just took buy side, we're going to continue to the upside, and then it dumps on them. Or, okay, we just took sell side, we're going to keep going. And they don't think of it as buy side and sell side. They think support and resistance and buyers and sellers and all this stuff. So we all have our own technical terms. It all kind of comes to the same point at the end of the day, But I believe the market will push, take this, and hopefully it doesn't do it overnight. Hopefully we get to catch it Monday morning. I'd like to see sell side on Monday. I would really prefer that we come down and we sweep. We at least get to like here. I would like it if we came down and we took all this through here. That would be good. I don't want to see the market go lower than here. I mean, I'm fine if the market wants to go lower than here, but if we're going to continue in a bullish uptrend, then the market should not go lower than this point, because that's kind of a major low right there. Because we had a major push back up to the upside after that low was swept. To where like these are more minor, tiny little lows that get swept before we have a push up. Do you think we should cover bias and context more on this note, since it's pretty much our bread and butter? It's just sometimes it seems like there has been a sweep already, but it keeps going lower. Well, so yeah, well, that's when you're in a bearish downtrend or a bullish uptrend. The market continues to keep going that direction and keep collecting liquidity that's above or below. So that's why it's very important that you pay attention to how the market's responding. Typically at market open, it's manipulation first thing, before you have true direction. You have consolidation, manipulation, true direction. That's why you got to be careful when you take trades right at open like I do. It's kind of ballsy, but I can kind of see things and make some decisions on the very split second at this point where I'm at. Do I recommend it? I mean, I probably personally shouldn't do it in my opinion, but because one day it may bite me in the butt, but oh well, I trust what I'm doing at this point, which takes some time to get to. Developing a bias though, yeah, let's talk about that, okay? So when I'm trying to develop my bias for the day, well, first thing we want to see is we want to see where we closed at, right? So just going to drop to the 5-minute to make it easier on me. Okay, so where's 4 o'clock? There's 4. So 4 o'clock, we closed at 504.50. So typically when you're developing your bias for the day, you want to look where we closed at, and then look where we opened at midnight. Typically, if we close lower, if we closed at one price and opened lower at midnight, typically we'll be bullish during the day. Now, if we opened higher at midnight, typically we're bearish through the day. But that's not always the case, because sometimes market will, right before market open and pre-market, it will take sell side or buy side and take some major liquidity, and then that will cause you to have to change your whole bias for the day. But that's a general thing that I go with when I'm trying to develop my bias. But also you want to kind of look at this too. So we closed at 4. We closed here, which is okay. I did not mean to do that. And lately it's been a little bit, market's been crazy in my personal opinion. Oh, look at that, guys. So that's like what I was talking about. Y'all see this gap right here? This is for the people that don't know too much about volume imbalances. This little gap right here. Tiny, right? Market went, what? About 40 bucks past it. Only to come back into it just to tap into it and then push to the upside. Market literally did a little fake C on everyone, came back, tapped into it, and then pushed upwards. That's a volume imbalance. So that's kind of what I was talking about. You had two right here on the 5 minute. So the market came back just to tap into those, then push higher. So that's what I was talking about when I was saying they're magnets. Yeah, it didn't even tap. It didn't even go for this fair value gap. It just wanted the volume imbalance. It literally barely tapped into it. I mean, bro, if you could have caught this as an entry, like that would have been beautiful. Like literally entrance right here, stop loss just on the other side, or you could do it below this low, because that's a $2. That's $2 between the end of this volume imbalance and these wicks right here. It's $2, $3. You're risking $15 on a contract. Wait. Or $60 per contract. It's regular hour close. Oh, so I'm just using this as an example. Me personally, I wouldn't have done it. But this is this is right before the market closed. Wait, is it? No, this is right when the market closed. Yeah, I wouldn't have done it. I mean, it would have been cool, and you can't even do it with prop firms. Because they don't allow you to hold things past 5 o'clock. But the market will come back just for them, only to push higher. And so you could literally have $60 minimal risk and on 3 contracts on a mini. You'd risk $60 if you had a real account and you use this. Like, and then you would have made what? Let's see. Let's check this trade. So if we bought at 501.50. So literally right there. And typically I advise people to go to the next high or next low. But even if you had gotten out like right here, it's 1,600 on one contract. Let's do 3 contracts. That's $5,000 on one contract. Your stop loss is $200. $200 risk, $5,000 reward. And I mean, we eventually at open, we came up and took all of this. So I mean, if you had the balls to sit through and go to sleep and be able to sleep through holding these contracts, you would have woken up with 10 grand in your pocket and you would have risked only $200. And that's on 3 minis. Now micros would be different, of course. It'd be a tenth the size, so you would have made like $1,000. Or wait, my math may be incorrect there. Isn't it 1/10? Yeah, it's 1/10 the size. So you made like $1,000, $1,100. You would have risked $20 or $21 and made $1,000. That's beautiful in my opinion. I don't think you can complain risking $20 and making 1,000. But yeah, you would have risked $200, made 10 grand on that tiny little thing right there, because it came back, and yet it did come back, but it didn't make it. It failed to take sell side right here. So what does that mean next? Buy side. The market came down, failed to take a major sell side. What's next? Buy side. I mean, even if you if you had continued to hold all the way through the end of the day, that's 15 grand, 16 grand. You would have risked $200. Like that's a beautiful Friday right there for anyone. Now imagine you having multiple prop firm accounts. Like if I did that with the 10 prop firm accounts I have, what is that, $150,000? And I would have risked $2,000 total. but I don't like to look at the charts after 4 o'clock. I don't want to be a slave to the screen, you know. We do this so that we can live life how we want to. All right, so back to this. We closed here. Where is midnight? Right here. We opened here. So we closed down here. We opened here at midnight. So we opened higher. Now, typically, you're going to want to see the market so typically based upon, I know this does not give you an example or it proves that this works, because we were bullish when we should have been bearish. So it's not a good example. But if you sit here and look at this, so no, it's even better. Yeah, I mean, truthfully, you are right. This is a better example because this is one of those situations where you have to think on the dime. So we came up, we took buy side, took sell side here, failed to take this sell side, came back up, we took buy side. Did we take buy side right here? Dude, did we fail to take buy side right here? Oh, wow, just by a few cents. Yeah, we missed by a few cents to take this buy side. Market came down, took sell side. What's next? Buy side. What did the market do? Yoop, to the upside. So we took some sell side. Next thing is market is going to take buy side. And that's what we did. We ripped to the upside at open. Did we do that right before it? No, we did that right at open. So we ripped to the upside at open. This is on the 5 minutes, so that's why the candles look the way they do. I'm just doing this so y'all can see kind of more compressed into one picture. So let's go down this way. So market. Hold on, y'all. I'll be right back. Okay, give me 1 second. Okay, that's sometimes how I develop my bias, but like I said, you gotta pay attention to what the market is doing. The market can change on you in a split second, and then you're just kind of up a river without a paddle. I don't try to go off of it every time. Because like as you see here, we came up through the night, we opened higher. So what, 4 o'clock is right here. Midnight's here. We open higher, we continue going higher through the night. And so we came lower through the day. That's wild. Yeah, I mean, so this just gives you kind of a general thing. Right now, like, and like this is just, it hasn't been working as much lately because we've been in a bullish uptrend. But I showed Mike this a little while back, and it worked better back then. I don't know if he can vouch for me on that. Right now, we've been too much in a bullish uptrend, in my personal opinion, for you to really be able to go off of this.
Yeah, I did some back testing all the way back from November of 2024, and it works like 92% of the time or something if you just do this and you take the trade. So like if you're predicting the bias to be bearish, if you just take like a short on like the first like short setup, like it works like almost all the time. It's just like recently, like the last week or so, it really didn't work out too well. But
Yeah.
I think even this week it worked like 3 out of the 5 times or something.
So like here, 4 o'clock. Then you got midnight. Right here, we open higher, and we push lower. Primarily, we push lower through the day. Wow, there's a lot of flat movement through here. Let's see, 4 o'clock. We're like right in here. Midnight, up here. So typically, one of the things you will notice, and this also kind of can influence, like I said, if we take a major form of a buy side or sell side, then the opposite should happen. And that's typically after midnight when if that happens. So then that will cause an opposite reaction or into pre-market. This just develops a general bias. This is not, I'm going to sell my soul to the devil and rely on this specifically bias. Like, it's bearish. I don't care what anyone says. It's a bearish day. I don't care the chart's going up. The chart's going to reverse. I'm telling y'all, it's nothing like that. This just gives you a general possible bias for the day. Then you got to wait to see what the market's doing pre-market, right before the open. And then, because it can change on you right there. Because like, let's see if this is an example. Market closed here at 376. Opened higher. And that is a good example. That's funny. And then it pushed to the downside. From midnight, it pushed to the downside. And so what happened on Monday? Wait. Oh, no, that was Thursday. So, yeah. So Thursday, we closed here. Friday, we opened at midnight right here. So we opened higher. So as long as the market doesn't go ahead and do it overnight, then you can expect it to happen during the New York session. The issue is we opened higher at night. The London session came on and we went ahead and took sell side because of that. So as long as the market doesn't do it before our session, then you can expect it. But as you see, we opened higher at midnight, meaning we should be bearish through the day. But the London session went ahead and it took sell side. So what happened right here at open? We took this final sell side right here, and we were bullish through the day. So from midnight into pre-market, right at open, we continued taking sell side. So it had already made its move overnight. Therefore, the move already happened. Now we're bullish through the day. That's why I was saying over here, now that we've worked ourselves out of this bowl that we were in, I don't want to see, I would like to see the market push, take buy side, consolidate overnight, and then us be able to catch to the downside at open. But you don't know, you never know, because the market could, through the Asia session and the London session, just go ahead and take to the downside. Which if it does that, then we could expect some bullish behavior through the day for our session. But I'd prefer it to consolidate because it's a perfect setup if so. I would love that. Makes it easier on us. So as long as the market doesn't do it from midnight into pre-market open, then you can expect it to happen for our session. If it goes, so if we open higher at midnight And as long as we consolidate and don't take major sell side, then you can expect us to take major sell side in our session for the New York. If it does it though overnight from midnight into pre-market, then expect the opposite. Now say we open lower at midnight. Now as long as the market doesn't come back up from midnight into pre-market, then and take buy side, then you can expect a bullish day. If from midnight into pre-market it goes ahead and does that, well then you can expect the opposite to happen. Those are only times that you would cause an opposite reaction. But that's how you can develop your bias, and that's why you don't want to marry it. You know, find a better woman to marry. Okay, so hopefully that helped you a little bit, Crimson. What else you guys got? What can I help with? Entry models. I kind of went over that though with you guys, except for fair value gaps. If any, I mean, some of the stuff that I would show you, I don't know how far you are into IT, Crimson. So that's the thing, is like I don't want to overcomplicate things because there's a lot of different entries that you can take based upon specific setups. But I also don't want to confuse anyone here that's learning things. Because I don't want to add a bunch of stuff to their plate that might confuse them. I want them to learn one thing at a time. But dude, I really don't do anything special. I mean, you can ask Mike. He trades exactly how I trade, except I use fibs just a little bit more than him. Probably. I don't know. I haven't really talked with him about fibs. Mike's been around for a while, and I'm proud of where he's at. I'm so new at it. I would have to start from the beginning. So I don't want to use up everyone's time on the call. I definitely want a one-on-one for sure. Yeah, for sure. BS, no problem at all. If you have questions, B, feel free to ask. Like that's why I do this. I want everyone to be able to, because what you may ask, it may help someone else, regardless of where you're at.
Chris, I have a question, very simple one,
Yeah.
which I am facing difficulties. I mean, you have seen my PNL. I mean, last 4 or 5 days, I was struggling to read bearish price action every time. I mean, whenever there are bullish momentum, I'm fine. And when the market turns into bearish, I'm giving back whatever I have gained. So that's the story since last 5-10 days with me. So what should I do to improve reading a price action? So rest of the others, I'm fine managing
Are you
risk.
still using order flow?
No, I'm not using at the moment.
Okay, because I felt like, because you all of a sudden one day posted you using that, I thought maybe you were overcomplicating things and adding too much to your screen.
No, I'm not using. That was the only day when I used. But I do use a TPO chart to see volumes, market profile, and volumes. So
I
yeah.
wouldn't. Have you always been using that?
No, just only for a reference to see where those orders are stacked, where is the more activity.
Yeah. I mean, if you haven't been using that, and because you were doing good for a while, and then you started adding some stuff, it seemed like I'd go back to what you were doing beforehand. You said you have no problem reading bullish price action, but bearish price action you have a problem with, right? Is that what you were saying?
Yes, absolutely.
So, what is it specifically that you're struggling with on reading bearish price action? Do you know?
Yeah, particularly when there is a diversion. Let's say market took liquidity and obviously is going to go to the different direction. Sometimes you see unexpected candles move in totally opposite direction and then start
Mhm.
doing those moves, or you can say continuation. So particularly bearish ones, bullish one I can understand. So
Yeah.
yeah, I mean that's the issue.
Okay. I mean, this is just one of those situations where you just gotta you may be having some FOMO, bro, thinking that you're missing out or that you're thinking that there's a reversal happening. Um, so the one thing I'll always tell you is like if you think we're reversing, look to the left and see if we've taken major sell side liquidity. Like, so say let me mark down here so I can look left because this is where we began to reverse. Yeah. So let's drop to a higher time frame. So like look at this right here. We had let's see if there's anything special on the 4-hour. So typically my personal, like what I like to do, if I'm going to trying to think of how I can word it. So when you're in a bearish downtrend, remember the market's always making higher highs. I mean lower lows and lower highs, right? And if you're trading on the 1 minute, that could be where you might be screwing up at. Thinking that you're catching a reversal. So looking at the 5 minute and the 15 minute may help you more because what that's gonna show you more kind of major liquidity over minor because a lot more is happening on the 1 minute. Less is happening on the 15 and the five and the 15 minute. So swapping back to 15 and 5 minute may help you more. Because as let's say the market's going down, and I really want to use this, but these big candles don't help.
Yeah, that's a problem. Those big candles usually knock me out.
Marcus,
I can control
yeah.
my risk, and I'm very good at managing risk. So even recovery
Hmm.
is very good. I have noticed. I mean, I posted my PNL as well. Thursday I was down. I think $1,200. I was down, and
Hmm.
basically brought it down to $400. So nearly 700, $800 recovery. So, I mean, only issue is, getting those big red candles. I mean, they basically dented my confidence. I mean, it's nothing wrong. It's just I have noticed confidence and reading those activities is a little bit making me more concerned. Yeah.
Yeah, I got you. So this is what I'm drawing this stuff out in 1 minute, these liquidity points. So this is when we were at all-time highs in this area. The market didn't really have anywhere to go at this point, unless there was news or, yeah, really news. Sell the news, you know. There was no liquidity above to really truthfully collect. So that's why we had this push to the downside, because we had to rebalance everything. And so like what you could do is, if you think we're reversing, you can go back onto the one, you can do it on the 1 minute if you want to. If you can't see these areas as much like you could on, like, so if I went to the 5 minute, right? Oh, where'd you go?
You know, another trick I used to see what is exactly happening, inverse chart.
Mm,
So I can see those red candles. When you inverse the chart, you can see all those red candles are spiking up.
mhm.
So that way I know I am messing up. So I should stay away until I get my confidence back. So yeah, I mean,
Mhm.
that's the only trick I used for myself to see what exactly is going on. So yeah, if you see, in normally we see green candles going up, that is a bullish. But when you turn this chart into inverse chart, you can see red candles going up. So yeah, that's the trick I was using to see and stay away from those trades. I mean, this is probably only myself. Other people are good with the bearish trend. But again, those red candles, they are very intense comparing to green candles. Green candles go in like stairs, and those ones are just like skiing down on those slopes. So yeah.
Maybe change them to green and black candles like I do. So like the color red in our mind is a negative connotation. That's why I use black candles. When you see red, we think of bad. We don't think of anything good typically. So that's why mine are black. It's all psychology in that reason. But so like what I was going to show you is, so I went on the 1 minute, I drew up sell side on the 1 minute, right? For the market when the market was going up through here. So when I see the market when the market starts to create lower lows, right? Be careful in this situation, because the market will sometimes come back up, sweep a high, only for then it to rip to the downside. So I see where you're getting faked out. But you got to think of it how market you got to think of like major sell side. This is a little bit more minor. So like if I went to the 15 minute, that's a major high right there. If the market wants to continue up further, it's going to push and take this major high. All this is just noise in the middle. We want to look at the major highs and the major lows. That's where our major liquidity is going to rest, because that's when you had a major market structure shift, right? To whereas you have all this white noise that's going on in between as we make our way to our primary destination. So the market came up, swept some minor buy side, and then ripped to the downside afterwards. But as you can see, we started making lower lows and started collecting liquidity through here. Market came back up, took some buy side, and we ripped to the downside. Now, on the 1 minute, it looks a little different. I hate how it takes me to the previous day every time. So there you go right here. But remember, this was the major high on the 15 minute. So we would want to see it get swept. And that's why using a higher time frame to look back on is helpful to you. But I want to trade on the 1 minute. But I'll draw stuff on the 15 and the 5 minute, especially the 15. So we go here. No, I'm sorry. I'm just going to keep it on the 5 minute so y'all can see more. So the market came down, swept this low, and swept this low. And that's when we had our change in structure. So that's when the market came back up. So what you want to do is on the 5-minute or 15-minute, find what works for you. Draw out those fair value gaps as the market's coming down. Now, what we do from there, change to the 1-minute. Let the market come back up into it. And if it doesn't come back up into it, find another trade. Don't stress about it. Find another trade. Wait for another opportunity. The opportunities are endless, you know? You're always going to continue to have more opportunities in the market. Now, you do left. Don't forget, because I've talked to you guys a little bit about that. So the market came back up into the area, and it's right around here, and did a rebalance. So I'm not going to want to focus too much on trying to find an entrance down here. And so when this is happening, you're going to want to look to the left, y'all. That way you can see where were lows on the way up. Where were major lows, where were major highs? Because the market will come back towards them to rebalance. And if it's going to continue to the downside, it's going to rebalance around that area and then push further down. So this fair value gap would have been closed through. This order block would have been closed through. This order block would have been closed through. This order block would have been closed through. And you would have been pretty mad. I think a lot of people would have been. So this is our entrance right here, because the market came back up into it, right into this area, did automatic rebalance, respected this fair value gap, and pushed to the downside. So that's how you would have found that entrance. And then you would have targeted this low or this low, this low, this low, so forth. But I don't know if you'd been able to catch that. That's at 9:30. Yeah, you would have been able to catch that, because that was way before the end of the day. Because and remember, I already took those blue lines off. The market had just swept sell side. It swept 3 points of sell side before coming back up. Then the market came down, swept this sell side, and then came back up. So you could drop back to the 5-minute. We could see if there is another opportunity that, like, that's not it. Another opportunity that potentially presents itself from the ride down, which you would see, okay, there's a fair value gap here. Yes, you wait for a pullback during a downtrend. You wait for a pullback during an uptrend before finding an entrance. That pullback typically happens after taking buy side or sell side. You will see, look, so the market took the sell side liquidity that's sitting right here, and it happens every time. Took the sell side liquidity, pulled back. Took this sell side liquidity, pulled back. Took all this sell side liquidity, pulled back. The market will always have a go in the opposite direction after it takes liquidity, which are highs and lows. It happens every time. Like, so what our job is we are supposed to sit there, let it take that liquidity, have a pullback. If it doesn't pull back, we look for the next trade. This is how we got to follow these rules, follow these standards. That's how you trade with no emotion. That's how you become disciplined. So from this next sell side point, the market did create this area. I'm not gonna, you don't want to typically get in right on the other low. Now, I mean, you can draw this up, see how the market responds to it. Okay, it closed through it. You could draw this up because that's a bearish order block. See how the market responds to it. Okay, it closed through it. You can draw this fair value gap, see how the market responds to it. Okay, it closed through it. You can draw up this bearish order block, see how the market responds to it. it responded to it beautifully. But not only that, look where it reversed at. It reversed at this low. It did a rebalance before continuing to the downside. What did the market do here? It did a rebalance before continuing to the downside. What did the market do here? It did a rebalance before continuing to the downside. What happened here? The market did a rebalance before continuing to the downside. So you will see a rebalance and it respect that fair value gap, that order block, that breaker block, whatever it may be, before continuing down further. That's why you got to look left. You got to be paying attention to where the market is, because you don't want to just enter on any fair value gap. You don't want to enter on any order block. You want to look and see where is the highest probability if the market's going to reverse, and if the market's going to basically pull back. Where could it pull back to? Do a rebalance before pushing to the downside. Okay, not here, not here. Okay, here's this major low, and the market pushed back into that major low area, did a rebalance literally in the same area, respected this bearish order block, pushed to the downside. Market came up in this area, did a rebalance here, respected this bearish fair value gap, pushed to the downside. The market did not present too beautiful of an opportunity here. And I mean, this is an area where I wouldn't be too crazy of taking a trade. Look at that wick. It just wanted to tap that fair value gap again. But it came up, tapped into this bearish order block, used it to push to the downside, and it rebalanced in this area right here. Rebalance. And it just keeps going. What happened here? Rebalance. What happened here? Rebalance. And so, but if you look at this on a 15 and a 5-minute, you'll see that the major highs, you'll see more major highs and major lows. Those are what we want to be paying attention to. And then we draw out that bearish fair value gap. We draw out that order block, drop down to the 1-minute. And now our job is to sit, wait, and be patient and see how the market responds in those areas. Because if you really want to, you can take an entrance in that area alone, just alone off that. Because like what I see in here is the market came back up into this bearish order block that's right here. There's my entrance. Is there a fair value gap? No. Sometimes a fair value gap isn't always presented. That's why the order blocks are very important to know about, you know? And then market comes back up, look to the left. Okay, look how it literally rebalanced itself in this area, pushed to the downside. What do we got right here? A fair value gap. Boom. Again, the market pushed back up into it. What we got right here? Fair value gap. Closed outside of it too. That's even better. That's not as pretty. That's a scary situation. I don't really like it when they close past 50% of a fair value gap. This is what I really want to see. I want to see it close outside of it. Yeah, it almost basically did. But then you can use that to the downside. And then, I mean, you come down here. This would not have been a good trade, then a very risky trade, because look at that wick. But you can see that that would have played into your favor. Although your entrance is at 390, that wick went to 460. It's a $70 wick. So that, but it closed still outside this fair value gap. That would knocked you out of your position though, unfortunately. Now you got, no, that's not a bullet. That's not a bearish order block. You got this one though. This little green one. Market used that to push to the downside. And then I think this is where we started to have the revert. No, we kept pushing. But do you guys do you see that kind of Riz, like what I'm talking about? Drawing it on the higher time frame and then waiting for the market to retrace back into it. Wait for the market to take sell side. Wait for it to take another low. Retrace back into a fair value gap. Make sure you're looking left to see where the market could push back into. That way you're not getting in too far down. And then wait for it to pull back around this area and then use that for your entrance. If it doesn't do that, look for the next entrance. I know it's easy to have FOMO. We are all here to make money. That's why we do this. But if you chase a trade and try to force it to happen, you're setting yourself up to not only one are you breaking your own rules, you're gambling. Because if the market's going to do what you expect it to do, then it's going to pull back to that area, or it's going to go to this one area that you're expecting it to. And you got to trust yourself. You got to trust your strategy. And you got to have those standards in place. So the highest that you draw this on is the 15-minute, right? Yes. Now, sometimes I will use the 4-hour. When I use the 4-hour, I mean, it's for like major zones. The 4-hour is just as good too, but it's not something I always dabble to. Like, for example, on this day, I used the 4-hour for these equal lows that we had. Market tapped into them. I was so mad about this trade. So I was hoping that the market would, where is it? Maybe I deleted it. I may have removed it off my chart. So so my target was 771. And maybe it's because it's on regular trading hours. Or no, it may have been on the 15-minute. Yeah, it was on the 15-minute. So we had an inefficiency. And I believe it's right here. Yeah. So this was the inefficiency. The next inefficiency we had to the downside. And I was so upset because my take profit was right here. And it stopped right here, $4 short. But when I would drop to the 4-hour, I had missed this. We had this low right here that I didn't see. What did the market do? It came and swept that. And then we reversed. That's all it wanted. It wanted these equal lows. It wanted all this sell side liquidity and this low. And then we pushed back up to the upside. And I was short by $4. My take profit was $8,900. I walked away with 5. I was not happy. This was a very strong trend. Yeah. Can we have a look at an absolutely regular boring day as well? Where we'd be looking for a pullback, but instead it'd be a never-ending chop. But draw a 15. The 15 and the 4-hour is going to show major liquidity, major areas of interest, major highs, major lows. Those are very important to look for. I will use the 4-hour. I just don't use it as much as I use the 15-minute. And the main reason for that is 15 minutes really going to it's still going to show what the 4-hour will, But say we're in an area that we haven't been in a long time, like back when we dropped all the way to 17,000 in the market, which was just recently, not long ago at all, right when we were down here. We hadn't been in that area in a long time. So I dropped to the 4-hour. That way I could see this stuff. Because if I was on the 15-minute, I was going to have to scroll and scroll and scroll and scroll and scroll. So that's one reason why I will use the 4-hour as well. They're still going to show the same thing. It's just going to be more condensed. So you want me just to show you a boring, choppy day? We really haven't had those lately. Can anyone think of one? Like, is there a day so to show how we get almost trapped by the fact that it's not trendy pullback, but just chop? 724. Thank you. I was about to start looking with you. So what is that? Drop down to 1 minute. I made a joke with someone the other day, and I was like, imagine if someone this and was like, wow, the market's just flat. Haha, that was funny. So this, you're talking about this day, 24th. So yeah, we had a lot of chop here. Software. What are you wanting specifically information on? Like, what can I answer? That's another Thursday.
So like how we would approach a choppy day, unlike trendy day, because see like when we're waiting for pullback, right, and this pullback doesn't happen, because I mean it happens, but then it's just constant reversal, basically from one value area to another value area or something like this.
I don't trade it.
Yeah, I know, but just maybe someone who knows. Just...
Yeah, no. I mean, like you're gonna have to pay attention to buy side, sell side. So, like, let's see. Me personally, I won't trade chop. I won't touch it. I'll sit back and wait for something. I don't. That's where a lot of people get screwed over.
Exactly, but how would we know if it's a chop or not? Because see, like it starts with a move. When it gives you pullback, you
Yeah.
enter thinking it's a correction, like on continuation of the move, right? But instead, you got chopped and reversed.
So market open came up and took this buy side liquidity right here, allowing it now to take sell side, which it did. So the market took the sell side liquidity. Following that, it came back up to buy side, took buy side liquidity. Following that, it came to took sell side liquidity. Let's see what happened here. It failed to take buy side. It looks by like a few cents. So then it came to sell side. Took some sell side liquidity. Failed to take to continue further down. Huh. Came back and took. This is a beautiful day for well. I'm not trying to sound bad. This is not a bad day at all right here. You just gotta be. Did it? No, I didn't tap into it. I was about to say it's funny if it just came back and just wanted that little fair value gap. I mean that little volume bounce. So I mean you just pay attention like to the major highs and the major lows that each one's creating. And I mean, you probably wouldn't have wanted to trade this. No. So you do have a reversal happen here, and it's it's like 2 minutes past 9:45. And then the market continued down up until 10:15. So there was no 10 a.m. reversal. So I mean, this would have been the good move to catch, the 9:45 reversal.
Yeah, exactly.
Market,
So I'm sorry, yeah. So during this move, right, like this huge leg down, we are saying, okay, wait for pullback and then short this pullback. But instead, what happens? We get pretty much like high of day, right?
well, there is pullback. It's twice that it happens. You got the pullback here. You got pullback here. So you got this fair value gap right here. You also got the volume imbalance that it came and tapped into right there. So you could target sell side here. You target sell side here. One thing I'd be paying attention to though, because this is pre-market. Yeah. I would mark out this high. But it pulled back into here. We got a continuation to the downside. Pull back as well again here. You have this volume imbalance that's right here that it tapped into before continuing to the downside. Then you have this bullish fair value gap that it used to play to the upside. You have another one right here that it used. It even tapped into this volume imbalance right here. Now, if the market's going to go down, it's going to close to that in volume imbalance, and then you can expect it to continue to the downside. Market kept coming up. Do have this fair value gap right here. Failed to take this still it tried 3 times that day. Failed all 3 times to take this buy side liquidity. So since it failed, it even failed to take this one right here. You're going to expect sell side now.
Hey, Lee.
So, yeah, what's up?
Hi, really quickly. Someone told me before that, and I don't know if it's true or accurate or not, but I'm just trying to like read the chart as far as like kind of what you just did, where you went through and you just marked out the volume imbalance, the fair value gaps. I think I need to start there because you're seeing it right away, which I know you've done it a long time. But someone told me that when the candles close, like equally, kind of like if you move your mouse over just a little to the left, no, not that far, just mm, let me see what time where it says like 11:52 a.m. You see those middle candles, 11:52 over right there. So you see how those are they close equally. Someone told me before that if you ever see that, you can expect a reversal, and it kind of does it again like around this between 12:22 and 12:30. So I guess my question is 12:22 p.m. and 12:30 in between. Yeah, go over.
These two?
Right. No,
Here
like
and here?
oh yeah, I guess that's an example too, where they're equal. And then right where that goes down, right before it goes back up again. So I didn't know if that was an accurate thing that people talk about within the trading world. Like when you see those equal candles, you can expect for it to be a reversal.
So are you talking one after another?
No, like for example, you see like right where your mouse is, how those are equal and then it goes down. And then
Mhm.
like right here too again at 12 between 12:22 and 12:30, it does it again and it's a major reversal. Yeah, that's one and it goes down and then that long black displacement candle, it does it again and then it continued to go up. Someone told me that when you see these equal candles like that, that is always it's always an indicator for like a major reversal. I don't
So
know if my
yeah, no, I see what you're talking about.
okay.
So yeah, if the market makes like multiple attempts to push to a certain point and it fails to do that each
Mm,
time, I forget what pattern. There's some specific pattern it's called. Maybe Mike may know it.
oh,
But that usually you can if it fails to push past it both times, yeah, you can expect it to go the other way. So you are correct on that.
oh, okay. Thank
Hmm.
you.
Yeah, no, of course. Now the funny thing is if it does that, well, now you just made relative or equal highs. So the market may go down to take some sell side, but then you can expect the market to want to come back up and sweep all of that. Because as you can see, we have this high here, we have this high here, and we have this high here. There are three relative highs. Each time it failed to take this high, failed to take this high, but it created these three relative highs now. And
Mm,
so the market came down, took some sell side liquidity, but then we had this major reversal where now it came up and swept all of this to take
mm,
all the liquidity that was resting above it.
okay. Thank
So that you are 100% correct on what you said. Just the market, it's hard to always know how far the market may take it to the other direction before coming back.
right,
But when you
right.
have relative highs and equal highs, the market loves those. Um, and
Okay.
so it will come back and take those. It's just when is hard to always know. So you just gotta pay attention to, are we in a bullish uptrend or a bullish downtrend, a bearish downtrend?
Oh, okay. Thank you.
Yeah. Yeah, of course. Um, let's see. So the market failed to take that high once again. So we came back for sell side. Um, which you do have an entrance here because it swept this sell side liquidity here and came back up into this fair value gap, which you could target this liquidity here, which you would have been correct on. Now the market did come down from there and it did tap into this fair value gap that's right here, where it then came back up finally and took sell side, which is what that would have been. That's just green candle after green candle. It's awesome. Once we took buy side, now we can come back and take some sell side. And then that's when you said, and you were right, we had chop for the remainder of the day. Um, and it's really hard to sit here and tell you, like, uh, I wouldn't trade this. I don't think anyone should trade it. I can sit here and show you the opportunities that you could have taken to take trades, but this is a lot of risk for very little reward. Um, we came up, took buy side, came down, sell side, sell side, sell side. We failed to take major sell side, came back up for buy side. Failed to take buy side, so we came down for sell side, where we went lower than these lows. Came back up. That's crazy. Took buy side. Um, came down, took sell side. Failed
Yeah,
to take
it's
buy side.
already past afternoon. I completely agree with you that there isn't like nothing to do here. I'm just an adept of one and done. You know, like there will be plenty of opportunities to trade. Just like one or good two trades just before, like I don't know, anywhere in the open. The like my goal was just to show Reese and other people the idea that you know that you're waiting for a pullback. Yeah, like it doesn't always. I mean, it would be too easy just to trade pullbacks and everybody
Yeah.
would be rich, right? Like, but because things like this happen, so
Yeah, no, 100%. So on these types of days, it's just best. I mean, if you can find an entrance, then go for it. There were a few different opportunities through here that you could have done it on. Um,
Just with fair value gaps that got respected really well. So it's just more than enough. Just get one trade to be done before 11 o'clock and be done with the day.
Yeah, but you also, I mean, just so y'all know, please remember this. We don't have to trade every day. I know we want to. We want those opportunities to make money. It's a great feeling when we do because we make it like no one else can. Like what we make in minutes, people make in weeks, you know? But you got to think about how we're growing a business, and that comes with preservation. So if we're in a market condition like this, it's sometimes better just to sit out, you know, and just let that day pass. You got to protect those profits. You got to protect your growth. You did have a few opportunities here that presented itself at open up until 11 o'clock, 12 o'clock. But for the remainder of the day, it just was not most beautiful price action. So just remember, guys, you don't got to trade every day. I know we want to. I want to trade every day. I'd love to trade. I love to sit here and talk about it. But we do this so that we have freedom to do what we want with our lives. We don't want to have to be stuck to a screen and give up our time for money, you know? The purpose of this is knowledge for wealth. We don't if we sit here at the screen all day every day, well, we're giving our time at that point for money. It's basically like we're working a job. So minimizing the time that you sit in front of the screen, I only do 8:30 to 11 o'clock every day. 8:30 to 11. Now there may be some days when the market presents itself in such a way to where it's just too beautiful to not trade, which I think was last Thursday. That I'll stay on a little bit longer because it's a good opportunity. That doesn't always happen. But outside of that, I only will trade from I'll take a trade from 9:30 to 11. I get on at 8:30 though to go ahead and start mapping out my day and making my plan. But outside of that, I won't sit on the screen past that. I don't like to. Well, you're already on track. I'm gonna keep going, you know. Any certain days you avoid. I mean, typically Thursdays, I like to catch the beginning of the day. Because typically you have consolidation. So I'll try to catch a trade off the open. That's about it. I mean, of course, then you got news days. I won't be in a trade during news because that's where most people lose the money. You could be up and then all of a sudden the thing wants to wick down and close you out past your trigger point for your stop loss. I've had that happen. I've been in a trade where my stop loss was in positive 500 and it closed me out at negative 1800 just because it wicked so quickly. So the main things I won't be in a trade during news, and then typically Thursday is the only day. If I'm gonna trade on a Thursday, I want to catch something at the beginning and just be done with the day. I don't want to be on any time past that because usually at market open is when the market's going to hunt for previous day liquidity. But the last few Thursdays have been pretty solid. So, I mean, like the market lately has just been weird. But yeah, you're not always going to have trend days, but when you should have opportunities, especially with NQ, to catch $50 to $100 moves. Maybe not always 100. Yeah. You're right. Yeah. Crimson and Riz, you're definitely correct on that. But I mean, like, you have an opportunity here to catch a $40 point move from here to here, $20 to here. That's $60. And so, I mean, that was just from, that's midnight. Dang. Anyways, to catch a $25 move, that's $500 in your pocket. Like, and the market typically will move 25 in one direction. So, I mean, it shouldn't be too difficult. It takes time, and then being able to see these things as it happens. What we're doing is training our eyes. You're training your eyes to spot these things, which just comes with time. And then being able to analyze and see what the market is doing and where the market's going, and being able to call it based upon that is something else that just takes time. Yeah, it happened to me too before. As I said, it was me out at negative 1800. That was very. What else? What other questions you guys got? Mike?
No, I don't have anything right now.
Okay. B, do you have any questions at all? I know you're trying to get everything down, but is there anything I can answer for you?
I think, well, I know eventually, we'll do the one-on-one, and more so it's like kind of like how you start your day, and looking at the chart and everything, which I know you did it a bit today as well. Um,
I mean, if League wants to do that right now, I'm down for that. If he wants to go in like replay mode and replay a random day.
Oh, yeah, replay sounds amazing.
yeah, if I didn't know how long it usually lasted, and how much time it would take you and stuff. But I would like to start as me just kind of getting rid of all of the other things that I had in my my mind as far as trading, because like I was telling you, I feel like I was watching a bunch of different videos, and also I was in another Discord where I just want to kind of just start over, really, to shorten it.
Yeah.
But yeah, kind of like I have tons of questions. It's just more so of just getting it the right way now and doing it the right way from the start. So I have tons of questions.
No, that's fine. And you just need to let me know your schedule. That way we can
Okay.
figure it out when you want to. So I'll definitely make myself available when you typically are. You just need to let me know what times work.
Oh
Um,
yeah.
my
Um.
off,
And,
my the bet. What are you gonna say?
oh, sorry. Go ahead. I was just saying every day I'm free. So
Okay.
whenever it works. Yeah.
So the best times for me are Fridays and Saturdays.
Okay.
So is that possible for you?
Yeah. Every day I'm
Okay,
I'm just
cool.
here on the computer. Yeah.
Okay.
So um, Friday, Saturday, and what time works for you?
Um, morning or night.
Okay. Um.
Strategy detoxification. What's that, Riz?
It's getting rid of old
I
things
meant,
that don't work, yeah.
I meant, when you watch so many videos and so many different strategies, your mind get, clogged with all these different different type of way of trading. So in that case, obviously you got to drop everything, detoxify, and stick to one
Mm-hmm.
strategy. That's what I meant here.
Oh
Yeah,
yeah.
that's what I
You
think
go
I
on
have
if
to.
you gotta be you gotta be careful with YouTube videos because you'll go on there and type in fair value gaps or type in order blocks or breaker blocks, and you'll find 16 different strategies on breaker blocks that aren't the same. So yeah, you just gotta be careful with all that stuff because I mean, there's more in ICT than what I've shown anyone here. I just don't care to use it personally. If you go and watch the ICT mentorship videos 2022, 23, 24, 25, there's so much information and I've watched them. But I want to keep it simple. I want to draw out relative highs, relative lows, equal highs, equal lows, and because that's just liquidity in the market. I mean, that's what we're hunting to begin with, and then just use fair value gaps, order blocks, breaker blocks to enter with. I don't think you need to do more than that. You don't got to go and do the silver bullet, the unicorn model, the just turtle soup, all of that. I think that's just, and there's more, and it just keeps going. But I just like to keep it easy, simple, you know. So trying to watch, instead of watching tons and tons of videos on YouTube, finding all these different things to do and that you can use, and that changes your strategy and complicates things, it's good to find your bread and butter, something that's just simple, that you rely on, that you know works. And like what Mike is doing lately, he's just waiting for multiple confluences to show up, and he's entering off of those. And he told me that took his trading from a 40% to over 90% success. And all he did was just wait for more confluences to show itself. He's not doing anything crazy unless he's just not telling me, and man's over there full porting like he said he was going to do. Give me a heart attack. Oh, but it's just simple stuff like that. And then being able to analyze the market. If you find the major liquidity highs and lows, and just when you see that, that's to then drop down to smaller time frames, see if the market's took buy side or sell side, and you'll know what the market wants. Like that opening range gap, it's a beautiful thing, because like check this one. You draw this up, market rejected it, the opening range gap. What's going to happen? Upside. Market rejected it initially, but it took some buy side liquidity, so it didn't have any purpose in going higher at that current moment. And it reversed at 10 o'clock too, which is a confirmation that the market's reversing for the day. And then it closed through this initially it didn't close through it, which is why I went long and then I went short. But then the market closed through it for the remainder of the day. We can go back onto this one. Wait, where did it open? 69. So here. Market came almost closed through it entirely, but then it came back up. That's confirmation that we're going to be bullish through the day. We go to another one. Where do we open? 94. So right here. Ah, man. Did not mean to use the fair value gap. Market rejected it at open. Confirmation for bullish through the day.
I do have questions on this.
Yes.
So you're using, is it like just the regular fib retrace?
Regular trading hours. Oh, yeah. So I'm just using a regular fib.
Okay, and then you're marking
It shows
market open at 9:30 to where are you pulling it from? I guess I
from where the market closed. So you'll go to regular trading hours, and this is the overnight movement that we're not seeing. So it's showing from when the market closed and when the market opened the next day. And this is overnight movement. So from where we closed to where we opened the next day, we came down, but it's not showing that. And I'm just using a fib. I changed it from 0, 0.25, 0.5, 0.75, and 1. So sometimes the market will go back for 50% of it, which is the 0.5. Other times it will close through it. So a lot of time I'll set my partial, or at least half my position, at 0.5 and then full take profit here. If the market
Mhm.
rejects it here and goes the other direction, then I'll close out my contracts. But like you can see here, the market opened. I think it opened down here actually. 87. No, it did open up here. So market came down, came right back up, rejected this opening range gap, pushed to the downside, and then we came back. And then we had a little bit of consolidation, but overall it was still a bearish day before the end of the day, I think. Yeah. We can continue further, find another one. And that's why I love these,
And
because
your fib, that's the only fib you use. Like you don't have a fib with a bunch of numbers and levels on it.
I'll use it. Yeah, I'll use an STDV fib, and I'll use an OTE fib. But outside of that, I don't. Those are the only ones I use.
Okay.
Now, if I remember correctly, this was the day that electronic trading hours. Uh-oh. I think this here. Forget if I use. Yeah, here it is. So, wait. Yeah. All right, so I measured out the high, this previous high, and this previous low. Yeah, it was that one. Sorry, this was a little bit back, multiple weeks ago. So market open, we came up, we took these standard deviations. We failed to take this one, which is when the market reversed through there. So that's when I went to regular trading hours. Drew up the standard deviation. Drew up this, and the market came through and closed it. So drawing these up are really beneficial to do because it's a lot of time you can use them at market open to kind of get a general direction of where the market should go at open. Opened at 472. Yep, that's right. The market a lot of time likes to close these. A lot of the time will. It may not do it off the bat. As you can see, it rejected it initially at open. And so we took buy side instead. And then the market came down and took sell side. Now you look at this high that's right here. The market, even though we didn't come all the way down to here, it was considered closed because of this high that's right here. It had bounce. It did a rebalance in price. Is this one? Yeah, this is one. So as you can see, look, at open we took the 50%, and then we went the other direction. We took sell side, and then the market came up for buy side, and also to close through this gap. And so I like to use these because you'll have to, if you're going to use them at market open, it's a lot of split second decisions. But it will help you kind of have a general understanding of where the market should go. because it will help you find positions as well. Because if it rejects it, typically we're going to go the other direction. If it starts to close through it, you can expect the market to close 50% of the way or all the way. So it's a very useful tool.
Thank you. Do you mind if I because I know you have the different settings for the different fibs, if I saw like the settings so I can set my chart up for whenever we are
Are you
on?
talking about the standard deviation?
Yeah, I believe you have like a standard and yeah, okay. So this one is this.
I was gonna try to take a photo of it and send it to you.
Oh, okay, okay, that would work too.
Yeah, I'll send you a screenshot of it.
All right, so that
So
one
this,
was the deviation.
you said what?
That one was the standard deviation one.
Yes, ma'am.
Oh,
And then let me get this one for you. So with OTE, if you're gonna use that, OTE needs to be at the most recent high or low, like literally the one that was just created. But you want to wait for a retracement back to the 0.62. If it doesn't retrace back to the 0.62, then you're not going to enter. If it retraces back to the 0.62, then you can expect a beautiful trade to play out in your favor. Whereas standard deviation, you can use that off of any high or any low that's in the market, and it typically will it will work out for you. And that should give you kind of a general understanding and allow you to kind of set up your spots to take partials and as well as take profit. Oh my gosh, it's 125. Okay, I'm about to get off, everyone. I didn't realize the time.
okay. Thank you.
No, it's no problem at all. Does anyone have any last questions before I go? Full porting 20 NQ minis. That'd be interesting. I will do this again next Saturday though, so y'all definitely be there if y'all can be. Of course, DG. Hopefully I answered some things that helped you guys. If y'all have questions, please, you're not bothering me. I will sit here and talk to you for hours back and forth because I enjoy it. I'd rather answer a question that you're having worries about or not fully sure you understand than you just to continue on and not know them, you know? I want you guys to get the help that y'all can. That's why I do this for you guys. I want to see y'all succeed. So feel free to message me, contact me, whatever. I just sent you the screenshots for the fib and the fib stuff B. If there's anyone else who wants those as well, I can send those to you. So just let me know if so. But outside of that, y'all have a blessed day, and I will see you come Monday morning. Let's make it a beautiful green week. I will definitely be on to share my thoughts with y'all and where I think the market will go Monday. All right, sounds good, Riz. Y'all have a blessed day, okay? All right, peace, everyone.